Hi, everyone. Welcome to our session today. The topic today is finding the right supply chain strategy to positively impact your cash flow and stock availability. I'm very happy to welcome Philipp here in the session. I think you're tuning in from Lisbon, right, Philipp?
Yes, it's correct. I'm in Lisbon, Portugal right now.
Very nice, very nice. Cool. I think we'll wait just a few more moments because people are still joining. But I'm very much looking forward to the session. I think it's a very relevant topic, especially in the current economic situation. There's a lot of uncertainty out there, and so managing the cash flow and the stock levels for your online shop is really crucial nowadays to be successful as an online merchant.
Yeah.
Yeah. So I
Well,
also want to. Sorry for Philip. Go ahead.
yeah. While we wait, maybe we can in the chat where people are sitting, where are they from? Just to get an idea where everyone's sitting right now. It would be interesting to see, maybe.
Yeah, definitely. Feel free. So on the right side, basically you see a chat window, and you can post your comments there or where you're from. And there's also a Q&A section, to which will come at the end of the session. So feel free to post there. Will be super interesting to have like an open discussion. I think we have, of course, a couple of points prepared, and Philip has some real first-hand experience, so it's very cool. But at the end, it's always nice to hear where the listeners are coming from, and what their questions are. So feel free to already post them throughout the session.
Great. I can see already Koblenz, Bern, Ireland, Germany. My hometown is Berlin, by the way. I lived many, many years in Berlin. Excited to see some people from Germany too.
Definitely. Cool. Then I would say let's get slowly started. Once again, my name is Petra. Very nice to have you here, Philip. Just a brief introduction of basically who I am. So I'm co-founder of Byrd. We are an e-commerce fulfillment company. We run a network of fulfillment locations across Europe, and we support online merchants, kind of handling all of their logistics so that they can focus on the other parts of the business. And of course, cash flow and the whole supply chain is highly connected to this. Philip, maybe you want to introduce yourself. I'll hand over to you.
Thanks, Peter. Thanks for having me. I'm super excited about this. I worked the last 6 years, or not the last year ago, the last 6 years, with you super, and joined the company in a very early stage as a first employee and took over the supply chain. We grew with this company very in hyper growth. We started in Europe, expanded then to the US, which was also our biggest market. And I handled everything from planning, sourcing, production, operations, logistics, distribution, you name it, product development, quality control. Typical startup, whatever needs to be done, I did it in supply chain topics and learned a ton. And I'm super, super excited to share a little bit also some insights today on how we design and how we handle certain things, and also how we handle cash flow. I think a very important topic nowadays. Let's dive in. Maybe let's start with a quick question to the round for a poll. My experience is I talk to a lot of founders, and a lot of founders have in their mind, I want to do it by myself. I want to produce by myself and have the products, the control about everything. Is it something that you are thinking about too? Love to hear, love to see the poll a little bit. You can click on that here. While we start, then we will have a look into it. We asked ourselves this question too a lot of times, and as we were in hyper growth, that was a question for supply chain, very, very important. I want to start actually on the right side here on the external production. You have from both for sure benefits and disadvantages. On the external production, I see the biggest benefits always. You can react very quick to your market changes. In terms of capacity, you have access to already existing state-of-the-art processes, best practices in terms of quality and knowledge on production processes. The partners that I work with, they were in the market for decades. They had a long, long history of experience. And with this market knowledge, I can also have a look, what are they producing? What packaging are they using? I also worked 5 years in fashion. Was very interesting to see what are other competitors producing with my contract manufacturer for the next season, for the fall right now. So you have a little bit of peak in trends, which can be quite interesting as well. You also for sure have low upfront cash requirements. You only pay what you produce. So it's quite simple. It does come with some disadvantages, which in my opinion you can overcome as well if you negotiate good and strong. Your success can depend on your partner. I think it's very important to understand that if your partner stops producing for you due to whatever reason, or your PO is late, you have no product to sell and your whole business, your whole plan is in danger. So that's something to really consider, that you are hanging there on the string of your partner. You may also need to protect your IP, your intellectual property. You may need solid contracts, and it may make sense to also get a lawyer involved to have these contracts really, really solid. Your lead times can be long. It depends always a little bit on the size of your partner and for sure on your own size, that on the purchase order that you place. So depends what's my eye level with my partner. We will look into that on the next slide. Let's move to the in-house production. And I think a couple of people have asked themselves, hey, I want to control it, I want to do it by myself. It's amazing. I agree, there's a lot of benefits. You can have what I, from a supply chain perspective, see the very quick reaction time, turnaround time to market trends or changes. You can change your production line how you need it. That's not necessarily lead time, it's really how quick can I react to certain things. I can control the quality management. I may need additional experience, but I also have, I think it's one that a lot of people look into, price advantages. And I can have my intellectual property protected because I'm doing it by myself. For us, it was formulation. For others, it may be something else. Another thing that I always think about is product development. When we're growing, we develop a lot of new products. We can have a quick turnaround with these products when no additional equipment is needed. We're talking about our own production. We need to think about if we have a new packaging, then we may need a new tool on our production line to handle this packaging. It comes with some disadvantages. Apparently, you need a lot of upfront cash to buy equipment, to buy these assets, to get the people running it. You import with all of that a lot of new problems in your company, which is not primarily your core strengths, where you focused before on marketing and sales. Now you're talking about your blue collars, shifts, capacities, and a production line that is down, and all these things. So additionally, you have a challenge, I think, when it comes to your demand patterns. Are they volatile? Do you have seasons do you have patterns in your year that can cost you money in your capacity usage? It's something to consider and can be a disadvantage. Let's have a look when we talk about in-house and external production about some requirements. Let's stay on the in-house production. When it comes to demand, we need to know our demand. Having a good accuracy in your forecast is absolutely essential. As I mentioned, is my demand volatile? I also need to think about, are there market expansions planned? Am I going to a market like the US? How do I do it over there? Do I produce here, send it over? Do I set up production over there? These are requirements that I have to know before I start. I think it's very important when we're young, we are growing. So I need this demand time part really, really understood so that I know where am I going to. On the supply side, it always depends on your business, for sure. But it may be that you need to have access to certain raw materials that you didn't have before, that your contract manufacturer was doing. Are there annual contracts? Is there limited supply available? Is it hard to get? These are things that you need to understand. You need to want to look into your volumes as well when you want to talk about price advantages and economies of scale. Then you need to understand, am I actually a big player in the market? Will I pay not much more than a contract manufacturer for these ingredients and may not have a price advantage at the end of the day? Another thing that I touch base quickly on is the skill set and tools which need to be available. You need to have the right machinery, the right equipment, the right knowledge. It's a lot of things that come together that you need to have access to, but also in terms of raw materials. Some raw materials that you use, like cacao, maybe traded on the stock market. So now you're looking into fluctuations of currencies, and you may need to do hedgings. That's another skill that you need to have in your financial model set up. So just something to consider. Not everything is valid for everyone, and just want to touch base on a couple of points. Looking on external production, it's a little bit easier when you look into requirements. You need to find a good partner. For me, I always say I want to have someone who's eye level. I don't want to be customer number 395. I want to be in the top 10s, ideally in the top 5. But I also need to consider that I'm growing. If I double my volumes, will I be too big in the future for this partner? So also something to consider. And I want to look into capacity agreements. We did a lot of agreements with our producers where we used a production line, sometimes full, sometimes 50%, and we blocked these capacities and had them always available for whatever product we needed. On the supply side, your partner can source these ingredients for you. What I experience, especially when we talk about turnkey partners, is they often look for a margin on the sourcing side. So you need to check, is the quality actually the same that I expect on the ingredient side? Is it adequate or not? Can he stock for me to actually get these price benefits if I buy quarterly or half year demands? Can he stock that for me? Does he have the warehouse capacities that actually gets these benefits, or does he have other customers using these raw materials too, in ideal case, so you actually get these economies of scale? And finally, I want to look at the raw materials and packaging requirements. We had something quite unique at euSuper with our packaging, so it was very tough to produce for a lot of producers. So it's something to keep in mind. You need to find someone that is able to fill your packaging. So much from the internal and external production.
Yeah, it sounds like you know both sides quite well, Philipp. So maybe, since you mentioned euSuper a couple of times now, maybe you can explain also to this group, for the people who maybe don't know it yet, a little bit what euSuper, what the products are like, and then basically what your setup was, and maybe the challenges and advantages of how you solved it.
Yeah, euSuper is a superfood company, as the name may suggest. It's a powder that you use, and it's a functional powder. So we put 5 ingredients in one functional mix, and customers used it in smoothies and blends, in salads, etc. So the product, we're talking about food, comes with a lot of requirements. You need to make sure it's really food safe. A lot of labeling requirements, a lot of law that you need to consider in your supply chain as well. But when you talk about your supply chain, you need to also consider what's actually my ideal setup. What am I looking into? Where do I have my partners, my warehouses set up? And some of you may have clicked on the website already and know Michael and Chris, the co-founders, which I joined 2016. And I want to show you here in this round a little sneak peek of how we designed it at euSuper, the supply chain. As I mentioned, we had actually 2 supply chains. We had a supply chain in the US and in Europe. I had also 2 teams that I was overseeing on each market, who helped me to handle all the partners. What you see here is we had a global sourcing of ingredients. We started with not less than 36 ingredients and ended up over time with 72 ingredients, which were very unique. And the sourcing itself was already a challenge. There's not many people that have moringa in their portfolio. So you need to find the right partner, and that needs to have all the quality requirements as well. As I mentioned, our packaging was a little bit unique. We had a craft paper that we used on our packaging, which we printed on. That's actually something that you use in warehouses to pack into your boxes as a filler. We use that because we love the haptic of it, the touch. But we only found one producer in Germany that was able to produce it. So we exported this packaging actually to the US. It was quite unique, and our customers loved it. So we considered it as something to be valuable. And what you see here is on the top, you see the European supply chain, and on the bottom, you see the US supply chain. And you may notice that they're slightly different. In Europe, I had a partner who had an excellent warehousing, who was dealing with food on a very big scale, and had a robotic warehousing, and was able to blend my products, had a really high quality assurance, was an extremely good partner. So I used this partner and used another partner then for filling it into my cans. We had a final control step. You always need to have some labs to give you final quality control before we then went in distribution of here with byrd actually, and had 3 fulfillment centers that we used with Amazon as well, and also D2C that we served there. The US was slightly different. Here, first of all, we need to understand the geographics in the US. You need to consider what port is my product coming in. Where do I set up my supply chain? We had a lot in Illinois, in the Chicago area. As there's a big history of food productions available. So we had a distribution center where we stocked our ingredients, we stocked our packaging, sent it to our producer who was blending and canning. So it was one producer, but the warehousing was too much for him. So we split this up and had 2 different partners here. We had a final quality control step as well, for sure, and then had again the distribution center, which was distributing our goods to, in peak times, 6 fulfillment centers that we had across the United States. Here, I think something to know, to give you also a little bit an idea about the size. In the US, I was talking in peak months about 60,000 orders per month. With such an amount of orders, it makes sense to have 6 warehouses. If I have less orders, it makes total sense to have less warehouses available and not carry so much stock with you. We use then expedited shipping options and got good agreements on these to overcome the longer distances and still be able to serve our customers within 2 days. So always keeping the customer in focus, how quickly can we deliver and how do we have actually the experience to the customer. Something interesting to note here is the lead times. You can see on the bottom the arrows indicating that we had, especially when we talk about global sourcing and packaging and logistics of all these containers that shipped all over the world to Europe and to the US, lead time of 90 days. So I had a lot of contracts in my ingredients that I had to consider, that I need to make sure that I have enough ingredients. On the assembling side of my finished product, I had 30 days, and sometimes I was able to expedite certain things even quicker. So that's quite a short turnaround time. And I think something to always keep in mind, where's my lead time and how do I actually set up my supply chain? I want to talk now actually a little bit about finances around these. And something that we see here, and I think we have also a poll, I would love to see some results on that, is anyone actually financing its supply chain except raising capital from investors? Maybe while I go through the slides, we have some poll going. I'd love to see some results. On the left side, you see the value of your finished product. You can define a supply chain also as a value chain. It's a very common definition. And what you see is that you have an exponential growth of your value as more time proceeds in your supply chain. An example, if I have my ingredients, my packagings, they're rather cheap compared to the finished product. And then when they land, you may have customs, you have all the logistics done. So your product's already increasing with the landed cost price. In the assembling of all of this is where the price is really, really accelerating, where it's really increasing usually. And it can always depend on your product. It may always be a little bit different, but usually you see a curve like that. So now you want to think about, where do I actually stock my goods? Because the value behind the product is what you need to refinance. That's the cash that you need to have, that you have piled up in stock. Here, I have done this on the imported raw materials. That also gave me the speed in my supply chain to react rather quickly on my demand and have safety stocks available in raw materials and ingredients. Now we see the 90 days and 30 days. It's a total of 120 days. Question is, how do I finance that? I see three major options to finance your stock. I think they're quite known, especially payment terms with vendors is the first one, the first go-to, and it's something that you should always consider to increase month over month, quarter over quarter, going in these discussions. You want to see at least 30 days, maybe even 45. Getting a credit line is something that some people may have tried, especially when you're young. It's very, very challenging. You don't have a good history. You don't have 3 years of company history. That's often what a lot of companies require from you. And it becomes very challenging to get a credit line from a bank. If you do so, a bank may be the cheapest option. You can also look with your investors if there's credit lines actually available, if they have something that they can offer to you. Definitely worth to question. But there's also the market. There are a lot of companies in the market nowadays. They understood that capital for a lot of startups is tough to get. And I've noted a couple here. I'm not working with them. These are some that I have in my research always asked, but there are many, many more. That's something you really, really want to consider. They are a little bit more expensive compared to a bank. But I think sometimes for a short period of time to have cash available and putting that in your growth and giving you a little bit of release in cash flow is worth some interest rates. The third one is something that not many people know. It's very common in the corporate world in supply chain, and that is refinancing your purchase orders. Refinancing your purchase orders, and I use a very simple example here. Let's assume you have 30 days payment term with your vendor, and you negotiate that, hey, okay, after using you now already for a year with 30 days, what if I pay you immediately? Would you give me 2% discount now on my invoice? If he agrees, you use a partner in between that will actually pay your vendor immediately, and you have a 2% deduction. Ideally, you have with this financing partner then negotiated that they charge you for a longer period of time than 30 days, 90 days, ideally, 2% or less. So this will give you a lot of release in your supply chain to finance your goods. And again, on the sourcing side, there's many options that you can use, sometimes even a mix of all of them. And then you have on the vendor side, on the assembling side, usually the 30 days with a payment term, but you can also refinance and use additional refinancing options. I think there was quite a lot now to maybe also digest.
Yeah, Philipp, but I think it's actually super interesting to get it in so much detail. And I'm just wondering, to summarize. So basically, what you're saying is that the credit line option is something that you would use more like tactically. Is that correct? And in which situations would you use that? Is it for peaks, or maybe you can explain a bit more about that? Because I found that, I thought, it comes up so often in our discussions and with partners and clients, that I thought maybe it's a thing that you would use all the time. But from your explanations, it sounded more like an ad hoc solution.
I think having a credit line negotiated, either with a bank or an investor or even one of these partners here. Circle Up is a very big one in the US, which a lot of people use. And you always have the option to use them when you need them. And you can also always choose to not use them if you don't need them. So it gives you a lot of flexibility, which is, I think, the biggest advantage. And you can negotiate quite big credit lines and also good terms if you use them frequently. So it's definitely something to consider, especially when the size of your business gets a little bit bigger. The refinancing is really on a PO basis, when you need to check, is my vendor actually the right vendor to use that? Does it work with my vendors, with my setup, with the countries I'm sourcing in? There are a lot of requirements that you need to check, but especially when you have bigger POs, 50,000, 100,000, it makes total sense to look into options like that.
Cool. Yeah, that's very very interesting. I think you can. It's visible that you have done this a couple of times before, so it's nice to get those insights there.
Absolutely, it's a great tool to use. um, Talking about.
And
Mhm.
yes, sorry to interrupt, Philip. From my side, I'm just checking if there's any questions yet. But since there's not, I actually thought we could also go into the topic of ERP systems, because I think that's also a question that comes up very regularly from our clients.
Yeah.
All of this is super complex. Should I really start thinking about an ERP system really early on, so that I can manage all of these processes and keep a good overview? What's your experience there?
Yes, it's a good topic. ERP systems is something that I discuss a lot with my clients, and that we discussed internally at Super also a long, long, long time. I think an ERP system does make sense with rising complexity. If we see here once more in our example, we were present on two markets. We had many partners involved. There was a lot of stock sitting at a lot of different people in a lot of different regions. So it makes sense to have an ERP system and to know exactly on one click today what is my stock levels and what's the cash that is tied up here. So it comes really to the complexity that you're facing. I think in early stages, something like an Excel is totally satisfying to work with. You can long time work with small systems or Excel and have great results. There is at some point a need also from your financial side. Usually, an ERP system implementation is leaded or co-leaded by the finance department. It might also be a requirement by investors. So, just something to consider when really what stage are you in, and it is something that will take a lot of your time. So consider also, do I have the resources available for that? Do I actually need to hire some resources in supply chain and in finance to actually handle that? Just something to keep in mind.
Yeah, makes a lot of sense. Then I do have a few more follow-up questions actually, because I find the topic really really interesting. I think it's a huge challenge, and especially for growing companies,
Mhm.
that to forecast, right? Especially looking at
Yeah.
the lead times that you mentioned. I mean, they're different for every merchant, obviously, but I think
Mhm.
they're kind of common to be around this amount of time. So what is your suggestion in terms of forecasting and planning, especially if you're a fast growing company or there's a lot of uncertainty around you in the market like today? Do you have any tips on how to handle that? And yeah, what went well for you with the forecasting?
I've myself worked as a planner in the beginning of my career and have worked with different tools. Forecasting is something, the start and the end of every supply chain. So it's extremely important to understand your forecasting and demands, that you at the end find a good accuracy. How good is my forecast? If you're on 85%, that's solid. Ideally, you want to be somewhere over 90. So the problem that a lot of companies face, especially when you're young, you don't have a history of data. You don't have a history of your products. You don't have a big amount of products in your portfolio. So you're trying to have everything 100% available, and it can be difficult. Generally speaking, you have two ways of forecasting. Is one way is bottom up, where you look in your history and you use statistical models to come bottom up to a number which you consider accurate. The other way is a top-down approach, and especially if you are in an e-commerce environment, you have direct marketing spend, you're young, a top-down approach maybe is a better solution for you, where you look, how much am I spending, how much revenue do I want to make, what's my ROAS in my marketing, How many orders will result out of that? How many picks per order do I have? What are the products that usually are picked? And you get to a quite good number, and you always want to refine this number over time. At the moment, you do have, as I always keep the measure of 18 to 24 months as a minimum in your history. Ideally, you hit somewhat of 3 years to have good bottom-up plannings. Then you can consider also bottom-up planning and also forecasting tool, because the tool will only help you really when you have a bottom-up statistical usage of statistical methods. That's when the moment when a forecasting tool really is powerful, or when you have a lot of products that you need to oversee. A lot of SKUs can get complex as well in a top-down approach, where you may need a software solution as well.
Cool. So you're saying 3 years basically also to cover the set seasonality, I assume, because otherwise it's too tough to predict and to plan. Yeah.
You can start with 2 years. You will get good results. We used, in fact, also a mixture between a bottom up and a top down to find the best number. It can be quite difficult in beginning stages. Yes.
Yeah. Cool. I see we have one question. The question is, how do you find partners specialized in the sourcing of packaging materials, such as the one you mentioned from Germany? Yeah, Philipp.
Yes. How do you find the partners? Always a big question that I get also in sourcing. At the end of the day, you are a detective. I usually start first with going in a supermarket, looking what is my competition doing, if the supermarket is where my competition is sitting. And have a look at what do they use. Get a good idea. Then trade fairs is the number one where you want to be. There are pack expos also in Germany where you can go, where most of the biggest packaging suppliers are. A good solid Google research always helped me too to find some leads. And if you miss the latest expo and you can't wait for the next trade show, I always recommend go on the website, have a look at the exhibitors from the last year. You can see them all there. Oftentimes you can actually search for certain things for your keywords, and you find very quick results where you can talk to them. And what I experienced as well is they're very helpful, even though if they don't have the product that you need, they know someone in the market that actually does that. So they're not necessarily seeing only competitions, they're seeing more everything as one industry. So asking suppliers also for leads helps a lot. Another source that I used a lot is my manufacturers. If I'm going into contract manufacturing, they know the packaging. They have lines, they have suppliers, they have customers that buy from certain suppliers. They can definitely lead you in the right direction.
Yeah, I think that's very helpful, because ideally you would want to have as little contact points as possible, right? To make it as smooth as possible. Yeah, cool. There is another question. How do you do forecasting in a hyper growth environment though? Sounds challenging. Yeah, especially what you described about, the US, 60 distribution centers, 60,000 shipments. Yeah, it sounds like there's a lot of dynamics. So maybe you can share a bit more insights there.
Yeah, a lot of numbers, a lot of things to consider there. The best way is always a top-down approach, especially if you're in a hyper growth. There's no way you actually have a good history of data to forecast the future. Top-down approach is what you want to go to. When it goes into your warehousing, you need to understand, where are my customers? What are the zip codes they're sitting in? How many do I have in which zones? You also want to know, how do I actually deliver? What's the lead time? What is the good customer service? So there are certain things that you really want to look deep into your customer data. I have the experience that sometimes your partner, your warehouse partner is also able to help you there. And it's something that you should involve your warehouse partner too. Hey, which should I open a new location? But we looked on a weekly level of where do we need to replenish our warehouses. We had at peak times 9 fulfillment centers that we used. So you need to weekly replenish these, and you want to look into the cycles of these. You don't want to ship only half a pallet. You want to ship ideally half or full truckloads if you are that big, or have at least full pallets. So you need to look into the cycles. How much stock do I need to carry there to actually have a good cycle as well?
And in terms of inventory management, how do you manage to maximize the efficiency there, right? Like you have some top sellers, I assume, you have some products
Mhm.
that don't go so
Yeah.
quickly. So what was your approach there?
I think one tool that is very, very powerful is an ABC segmentation. That's something to consider. The mistake that I see a lot of times is that people try to keep 100% availability at all times at all costs. That does make sense in the very early stages of your business to do that. Over the time, it becomes quite costly to do that. And if you do an ABC segmentation, which is an 80, 15, and 5% segmentation of your revenue or your cost, whatever you want to use it for, but here in terms of revenue, then you may see that there's certain products that only sell 5%, makes 5% of your revenue. And the costs to keep them at all times in stock are much higher than the margin or the revenue that you gain from that. So you need to consider some segmentation in your portfolio over time. Um, the best practice in the market is usually something between 95 and 98%. There are rarely any companies that keep 100% availability at all times, especially at times like these where lead times are high, supply chains are very volatile, a lot of events happened in the last couple of years. So it's very, very tough at these times to keep such a high availability.
And would that mean that you don't have the products available then at all, or that you only have them in certain distribution centers and the lead times might be longer, or what would be the approach?
That can be one approach, that you say, hey, certain products are only used from, let's say, close to my fulfillment center. I don't want to truck them through the whole United States to reach when I have my full distribution center on the East Coast and I need to have them on the West Coast. That you take the hit on the service level here, that this takes a little bit longer. That's something that also Amazon does. They have a very clear structure in that. But yeah, you can also, again, 98% doesn't mean you don't have them at all. It means you don't have them 100% of times available. So,
Yeah, yeah.
and you are okay with you, in worst case, hit rock bottom with zero availability. And then in a week later, you have it again, or in 2 weeks, and you're facing an out of stock situation for a week. It might be cheaper for you to actually then selling it.
Yeah, makes total sense. And like I always see it from the warehouse side, of course, but we also look at products from an ABC perspective, and for us, it's more about where to put them in the warehouse so that it's more efficient and the routes for the picker are not too long. But yeah, I think that makes a lot of sense to also look at it from an availability perspective for sure.
Yeah.
Cool. Then maybe my final question, Philip, just you knowing the market really well. What is your outlook for 2023, given kind of the whole economic situation, the challenges around us? Do you have any recommendations for the merchants?
Yes, I think we all follow the news. Just this week came a lot of outlooks for 2023 out, economic outlooks, which are clearly saying we will face recession also on a worldwide level, driven by the US. So cash will be king. It's something to really keep an eye on. You want to keep your money tight and you want to keep it close to you. You want to make sure that you don't invest too much. You may want to rethink certain expansions in new markets. Is that now the right time? Again, everyone has different products. Everyone can have different chances. It doesn't mean everyone should stop doing business and growing. Just rethink it and make sure that you now is really it's really important to optimize your stock levels and keep a very close eye on your stock levels, as this tied up capital will be needed in worst case. And one tip that I always have and that we used several times and worked very, very well is we started company-wide margin improvement projects, starting from product development, but also going through everything that we're doing, where we challenge our supply chain, we challenge our marketing, to find 1 or 2% more in our margins. These projects help you a lot to actually have more cash available and keeping your costs low. Another thing that you want to look in is really challenge the supply chain, challenge the lead times. Can I optimize things? Now is a good time to think about refinancing, even though interest rates are going up, but you want to make sure that you have cash available if you need it. And we always have the saying in German, die Kriegskasse. At war times, you want to have some dineros in your pocket when you need them. So make sure that you now use the tools that are available to optimize the cash flow.
Great. Thanks a lot, Philipp. Yeah, I think that that is certainly something that, I would confirm also from what I see around us. I think that's definitely something to look out for, having enough cash and kind of really rethinking everything that you're doing right now and challenging if you can do it more efficiently. Cool. Well, thank you very much, Philipp. I think that was super insightful and really nice to get really some firsthand experience from you. So thanks everybody also for tuning in. You can see Philipp's contact details here. I think we'll also send a quick follow-up email with this and the link to the recording, so you can reach out to Philipp if you're interested. Thanks for listening in. Thanks, Philipp, for sharing all your insights, and I wish everybody a great rest of your day. Talk to you later, maybe during one of the next sessions.